Thank you, Vijay, for being with us today. It's a pleasure having you as usual. Today, if you would like to have an expectation for the end of this year, which of these expectations are closer to your mind or to the reality, 120 for Brent or $80?
Well, I think 120 is definitely more closer to what we expect on Brent for the end of the year. 110 to be precise is what we anticipate Brent to end the year at. Supply concerns will continue. It does look like the people will keep reducing the supply for oil. At the same time, we do expect that demand will reduce this at the end of this year. It does not look like we're going to have a very harsh winter, and hence the demand also for oil will be reduced. So we actually do expect some pressure coming in on the downside due to lack of demand, but I think the supply issues will overtake, and hence 110 actually seems like a more fair target for the end of the year.
You think that the demand will not be strong. This is due to the condition of the climate, or what else?
Two major reasons. Of course, one is the climate. It does look like we might have a very subdued winter. At the same time, it is also expected that the recovery expected from China and the manufacturing process might not be as rapid and as rampant as expected. We might see a mild recovery, but it is not going to be a steep one. So it does look like a slowdown in the economy will also cause the demand to be a little lesser.
Concerning about the strength of the dollar, interest rates at the current levels, and what we heard from the central bank, specifically from the Fed, don't you think that this will be from the factors that will pressure the US dollar, or you don't see a correlation?
I don't see much of a correlation right now with the US dollar and oil, because oil is majorly running on basis of the supply issues and the supply curtails more than the issues actually. It is that reason why oil prices are moving upwards, including while with the dollar is also moving upwards. We have seen this month be actually the best month for the dollar index, as well as the best month for oil this year. So we have seen both actually having a positive correlation rather than a negative correlation. That is expected to grow. At the same time, even it does look like gold also will have a positive correlation with the dollar, is because the higher the dollar goes, the more the uncertainty of the economy starts increasing. A 25 or 50 basis rate hike from the Fed for the rest of the year and for the rest of this, let's say, the cycle, would not be a major issue. But if we do see a rate hike or a chances of a rate hike above 50 basis points from here, we could definitely see the soft landing picture being out.
Before this question, do you think that buying the commodities, which are the alternatives, is something that should be in the portfolio?
Well, we have done a lot of research on fuel oil, natural gas, heating oil especially. We do believe there is definitely a crack spread which is day by day increasing, where we see WTI and Brent oil increasing, but other forms of energy are not moving up as much. It does look like the catch up will follow either at the end of the year or the start of the next year. So yes, definitely playing a crack spread where we actually go long on other energies will definitely be a good trade to take at this time of the year.
Today we have this conversation and the difference of views, that we are in a super cycle for the commodities, specifically oil. And when I'm saying a super cycle, it means that high prices for longer time, and that could reach years or a specific temporary, and maybe the situation could go back to nature during the next period in the middle of 2024? How do you see the situation for commodities? Are we a super cycle or it's just a temporary higher prices?
Well, like I have said before, this entire cycle of the economy does remind a lot of the early 1970s, where stagflation was the major issue, and it does look like we are reaching that same cycle again. It is commodities which are expensive, inflation which is sticky, and the markets which are neither falling, neither rising up. A sideways equities market is what we should expect for the end of this year as well as next year and probably even 2025. A steady or a high increased prices in commodities, especially the major commodities like oil and gold, is something we can expect for the coming 1.5 to 2 years as well. So yes, it might be a period of consolidation rather than growth, but as long as we're not really seeing a major downturn in the economy, it's not a really bad time to be in.
Thank you very much, Mr. Valecha, for being with us today. It was a pleasure having you.
Thank you so much.